going to take a look at Gann's great mathematical discovery. This was from his 1954 booklet, How Not to Lose Money in Commodities and Stocks. I think it was called 1954. I think that was a couple of years before he died. Anyway, he made the comment here in 1908. May 12th, he left Oklahoma City for New York. August 8th, made one of his greatest mathematical discoveries for predicting the trend of stocks and commodities. So there are a few core things that Gann's known for. One of them is to predict a certain price to be hit in a certain amount of time. And that's what one of the interpretations of this great discovery is that. And I've seen two interpretations made for this that are out to the public now. One of them is speculating that this is the Mercury cycle of 88 days from May 12th to August 8th, which it is. Another one is that this is connected to the North Node, which also makes sense in the context of this writing and some comments that he made in the Tunnel Through the Air book. Now, I have my own interpretation of this, which I'm going to show, and I've already made a video of this. I'm going to refer to that in a minute, but then I also have another discovery. It's very simple. It's a different calculation, but it does really the same thing. And I got that from Professor Weston's paper. So they're talking about a very similar concept, but it's done mathematically in two different ways. Okay, the markets are all responding to mathematics. Math, and it's not hard math, simple math will let you predict price and time of markets in any time frame. And the other main concept that we use is astrology/astronomy. But the mathematics is what puts us into precision. Here's the quote from the document. It was called Why Money is Lost on Commodities and Stocks and How to Make Profits. And there he talks about the 1908 discovery. Anyway, this is a video that I did about 9 months ago. You can search the channel and find this. Watch this video for a few clues. I'm going to show a couple more examples of this. So what we're doing with this method, we're taking something and we're using that to project a swing termination point, or the point where the trend is going to reverse. The example that I gave in that video was for crude, and it was, you can see in the upper left hand corner, it was the March 25 contract, and this was actually early in February of 25. You can see the date on the bottom of the chart. Anyway, the price target was at the blue vertical line, and the time target was where the arrow is. So we had price and time come together exactly on schedule. The market stayed there. It reacted hard off that level, closed high, came back down, made a retest of the low. We got a false break and then a sharp reversal to the upside. So this concept works. It's very valid and very reliable. I've never seen anyone else make these calculations and put them out in public except for one guy. One guy who has consistently made a lot of market calls using this particular formula. I checked some of his charts and did the calculation, and he has figured this one out. So this is a chart of the gold market, and after this high came in, I was looking to predict the area of the low for the swing to come in. And this was the price level I got, and my time count was at the first red arrow. You can see we actually hit target 4 days early, and this will happen, which is fine. Now, you can also project this time cycle further, and you'll get further hits. You can see I projected it out to here, which had projected the low, and the next repeat of that time cycle came in right at this high. So this is on the current gold market. Now, I could work off of these lows and project to the upside. I'll get a new time cycle and a target price on the upside. Now I'm going to go to showing an intraday example. Now, I talked about the market context in the other video, so I'm not going to talk about that again here. I recommend you go watch that video to get some additional clues and some other context. But that date, very important. This is purely a math calculation, very simple math calculation based on numbers that Gann has popularized in his writing, and people have built systems off of them. I'm going to show how this works on the intraday level. This is my master chart with the rainbow indicator, with the Vedic rainbow, the pH, and the master planet Vedic cycles on it. Anyhow, what I did here, I'm looking to use this formula to project upside off of the low. The low of the day came in early, right around after the open at 9:30ish area here. So I was looking to project the initial highs. So generally, this calculation, it will go to, depending on the numbers, this will generally go 1-to-1, a price to the full time cycle. But I will use octave harmonics of the price and the time and watch for what happens at those points, because you can get the hit in price in an earlier part of the time cycle. It may not go the full time. A lot of it has to do with the price of whatever market you're looking at, stock or commodity, and how much time has transpired before you make your calculation. So what I'm showing here is the blue horizontal lines are the price target. So the actual calculation is at the lower blue line. And just to show something additional, I marked the second projection of that same price move. That came to this area here where there was another reversal. If I take the halfway point between that harmonic, we had another little intermediate high. And if I go one harmonic higher, I get the high of day, because that came in right up here, right where this bar closed. So each of those price levels reverse the market. In the first case, the halfway harmonic, or what some might call the so tone, flip that as well. Now, looking at the time period, I generally break the time cycle down into quarters. So the quarter cycle comes in at this high, and these can be used as timing or pivot identifiers. So we come to the quarter point off the low. We have not hit price yet, and we get a significant reaction. Okay, we know we have to meet this price by the time we get to the end of the time cycle. So we're looking for areas where we can get in or take profits. The second point, or the halfway point of the time cycle, is another minor high, lower than the first high. So right now we're halfway through the time cycle. So we made a run up, then we got a little ABC move back down, and now we're looking for this price to complete at either the 75% or the 100% point in the cycle. What happens, the market reverses back up before 11 a.m., tests the morning low, fires up off of there, and goes right to price here. The full price cycle is hit, where we expect a reversal, and it comes in right at the 75% point of that time cycle. So the market makes a push down, it reacts back up, does not quite get back to that price level, and we hit the end of the time cycle and the market reverses back down. So this is the calculation, just one example of the intraday level. You can use this on any time frame. This calculation has not been put out to the public. I don't know if I'm gonna show this. I may do another book and just show some of this higher level Gann stuff, because I know people want it, but I don't want it. It's so simple. If you just put it out there, then everybody else is just gonna take it and spread it around. So I'm not going to give it away, but I'm giving a lot of clues where people can come in and start to look at this and figure it out for themselves.